Hi, welcome to the market alert for Thursday the 30th of October 2014, and starting off with the 5-minute chart, we've got the Dow opening up and moving higher, trading up to the 17,050 resistance here. So again, as I mentioned in yesterday's market alert, these lines are incredibly powerful, so let's just move on and see what the market does. So we've got resistance here. The market doesn't like the 17,050 there. You can see it keeps having a push to the upside, but the psychological level there, the big round number, is causing this market some grief. The market does manage to trade through the resistance. We see an increase in volume, which is exactly what we want to see, but then all of a sudden the market runs out of steam and reverses with selling. So having sucked a lot of people into the upside, the traders then decide to reverse the market. We see the selling and we get a sell signal there. So we have a potential trade there, and in the bottom right you can see me marking the trade up there. You can see the line being placed onto the chart. So what I'll do is just wind this back a bit and show you exactly what's going on here. So we have a sell PTP. We've got the signal below the resistance, which is good. We've just seen the market fail above this resistance. So it's worth a punt to the downside, even though the market is generally long, because we've come back below this, and more importantly, we've got the FOMC announcement in 3 hours. So as I said yesterday as well, the market's likely to trade sideways or go higher in one direction, or go to the upside for the duration of the session. Well, at the moment it's failed miserably to do that, so it's worth say a punt to the downside because we've got this resistance here as well. So I've got the order ticket open, and it's a case of just marking up the trade. The entry price is 17,037. I normally would just go in at market, but I was busy doing something else, so I went in with a sell stop, and also at 2 points below 17,035, and then place the order there. You can see there the trade is now placed, and we get the horizontal line on the chart there showing where the entry price is going to be. So the market then continues to trade, coming down towards the entry price, and once hit, I then place the stop loss, and you can see the stop loss being added to this trade. So let me just make this larger for you so you can see this as well. So I'm clicking on pending order. I'm going to put in a buy stop. I'm already short the market, as it's known, so I need to buy in order to close the trade. So I'm now going to put in the stop price, which you'll see in just a moment, which I think was 17,066, and I think I went to 17,067. So again, using the next odd number to the upside there, double checking I've got the right price, which is why it's taking so long, and always make sure you've got the right price, and then just placing the order there. So then again, now we're just free to carry on and leave the trade to run its course. So let's fast forward. We can see the market coming through the entry price. So the market has now gone through the scalp convincingly down to the previous day's high. So what I'm going to do is just to see if this market will trade down to the next psychological level. So what I'm doing is going to move the stop to break even, just to give the market enough room to breathe, and then to see if it will trade down to this psychological 17,000 major support level for this market, and has been for the last few months before we had the correction. 17,000 is very important to this market. So we've got the market traveling down towards this area, and you can see here what I'm doing is modifying the stop from the original position. So once again, let me make this larger for you so you can see what it is that I'm actually doing. So I'm going to right click on the original stop, I'm going to modify it, I get the window, and I'm going to change the stop down to break even, my price of 17,035. Just make sure it's typed in correctly. You can see there that I made a mistake, so always make sure that it's right before you actually place. And now I'm going to left click on modify, and there I'm told that it's correct. And now you can't see an additional line on the chart because obviously it's at the same price as the entry. So the market then continues lower. We can see now the market hitting the psychological level, which is what I thought it would do, because this is a major support area. So at this point I'm thinking there's not much chance this market will go any lower. So again, you'll see me in the bottom right if I just make the window larger again, closing out this trade and also cancelling the stop loss. So now I've selected the stop order. I'm going to right click on it, modify or delete order, and then when the window comes up I left click on delete and cancel this order. So to close the trade I just right clicked on close order, and the order was executed and closed out. So the rest of the trading session after getting out remained really quiet. You can see the 17,000 there finding support, trading just below it. So the decision to get out was right. The market coming back towards the scalp there. And again, it's these psychological lines. They do make a big difference when you apply them to your trading. And again, just to recap here, the reason for taking the short is that the market gave a signal below this psychological level, and then of course generally the market will trade to the next one, as I showed you yesterday in the market alert. So that was my reason for getting out. The second reason for getting out was that I knew the market would be fairly quiet because of the waiting for the FOMC announcement at 6 p.m. So we see the market moving a bit lower there. And there's still got the entry price marked up there from the original one, so you can see it went down to around 50 points. But again, I'm not bothered about that because I know that we've got the FOMC news, the vertical red line there coming out shortly. We get another potential trade that's cancelled, and this one for me and also for my money is too close to the economic news item that's coming out. Anything could happen. It could be released prematurely, which is not uncommon. So this one I chose to ignore, even though the market did go down when the news came out. You can see there, that's the release of the FOMC news. We see the market testing here. There's some buying coming into the market, but we've got this resistance now at the 16,950. That's become a resistance for this market. And again, you'll see prices retesting. Let's throw it down 50 points and see what happens, and see if we can get anybody to go short on this. That's the general tactic because the market is a buyer's market, as I've said before. So we see the buying coming into the market now with these two bars. The market then reverses off the close of the previous day. Unfortunately, no signals to get the buy side, but we can see all of this testing, and I am going to do a course of videos on these bars, what they mean, and how you can read the market using these bars, because these blue bars really are what known as tests. The market is pushed to the downside to see if there's any selling. If there's no selling, then the market will come back, and you'll see this here again. If the market can't move higher, they will retest the market before moving higher. So green bars follow the tests. We get the red bars before, so the selling comes in. The pros test for selling, any further selling, that is. If there's no selling, they'll buy the market and move it back, and that's the pattern you're actually seeing. They want to see how bearish the traders are based upon Yellen's comments about stopping the bond buying program that she spoke about. I don't know the details. I never listened to her. It's all in the chart for me. I can see exactly what's going on. They keep supporting the market at 16,950, and there you can see the market coming back above the 16,950. Sorry, this is the 16,000 level. Excuse me. So then the market moves higher. There's no signals, unfortunately. It's a very choppy session following the announcement by the Fed, which is unusual because normally the reaction, as I said in yesterday's alert, is one of just shake out, reverse, and go back to the upside. But of course, the Ponzi scheme that is the Dow Jones at the moment is held up by all of the QE money, and of course if that's going to end, then the bubble is going to be burst. So that's why you're not seeing the momentum rally back to the upside like we've seen before. Right, let's have a quick look at the daily chart and the news and the implied volatility before concluding. So in the daily chart we can see the market trading through the 17,024 level, only to find some resistance and end the day slightly weaker there. In the news, we've got 1 p.m. Yellen is going to be talking about what she spoke about last night, no doubt, and hopefully she'll be done by 1:30. So watch for volatility at 1:30. If she's still speaking, and she generally speaks for 3/4 of an hour to an hour, so there could be a lot of volatility at the open of this session, so you may want to wait before taking any of the early trades, or to check with the likes of CNBC or whatever, the news channels, to see if she's still speaking. But the chart will show you if she's speaking or not, because the volatility will drop off as the market reacts. And of course, between 1 and 1:30 it's going to be pre-market anyway. 1:30 is the only time we're interested in after that, so it'll only be 15 minutes into the session. So just be careful, because what she says the market takes note of, whether it's a pack of lies or the truth. It will use that information to manipulate the market, so be careful after 1:30 today, because you may get a bit more volatility than normal. Right, let's have a quick look at the implied volatility, see its reaction to yesterday, and then we'll conclude. So no surprise really, the implied volatility moving back up a bit yesterday to 12%, obviously on the basis that the news from the Fed was slightly negative on the basis of the tapering issue and the bond buying program ending. I think it's the end of, well, it wouldn't be the end of this month, but next month or whatever she said. So again, that's just to increase the volatility slightly. So, but again, I would still see the market moving back to the upside, given the current state of the implied volatility in the market. Another run to the highs before the bubble eventually bursts in this market. Right, that's it for me today. I will see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support, and also for watching. I will see you in the next one.